Hi, I'm Parag Sanghani with the Westwood Salient Energy Team. For this month's video, I'll recap November performance and give an update on energy valuations as we enter year end. Going on to the slide deck, November was a solid month for energy, with midstream companies and MLPs up about 5 to 6%, while large cap energy companies, as measured by the XLE, were up 2.5%. The producers ETF, the XOP, was up 6%, and even oil services were up 2%. Clean energy was down slightly for the month, as you can see for TAN and iClean. However, the sector has been an outperformer this year, up 50%. Outside of clean energy, the year-to-date numbers are generally okay. Not exciting, but not too bad. Midstream is up 5 to 11%, depending on the index, while broad oil and gas is up 3 to 8%. Commodities have had a big year, with oil down 18% and natural gas up 34%. We've discussed in the past what's driving a lot of this, but to recap quickly, natural gas demand is rising quickly, while supply for oil globally is rising quickly and creating an oversupply, hence the different movement in the commodities. Individual security performance was varied during the month. Some of the biggest NGL-focused companies like Targa and ONEOK here in the United States and Keyera in Canada had a very strong month. On the other side of the equation, VG continued to lag as global LNG markets look relatively saturated for the next few years. Generally speaking, Canadian companies had a good month, while MLPs came in second and C Corps lagged on a simple average basis. For the year, Canadian companies and MLPs are up low double digits, while US C Corps are down, driven primarily by LNG-focused companies. Just to reiterate, this is a simple average. On the positive side, natural gas and power-focused midstream companies have done quite well, with Solaris up 69% and both Antero Midstream and DT Midstream up about 25%. As we approach year-end, I wanted to take a few moments to recap where valuations stand. Oil and gas as a sector remains out of favor. We believe this is due to oil prices dampening general sentiment. However, capital spending is accelerating for natural gas as demand from AI and LNG is growing rapidly. We believe that healthy midstream yield of about 5%, coupled with dividend growth of about 5%, sets up a positive backdrop for 2026. From a valuation standpoint, MLPs and midstream C Corps are trading at about fair value. They are in line with 5-year averages, but about 10% cheap versus 10-year averages. More broadly, energy companies are mostly trading at a discount today. E&Ps are about 26% cheap relative to 10-year averages, and oilfield services are about 19% cheap. We believe that the industry is well positioned to deliver growing cash flows through the rest of the decade, and an investment in the industry is a great risk-reward opportunity at this time for a long-term investor. I'll leave you with that for this month, and thank you for listening. If you have any further questions, please reach out to your Westwood representative.